It is a profound irony of history that the most effective rulebook for the frenetic digital asset markets of 2025 was written by a man who never touched a computer and traded using a ticker tape and a chalkboard. Jesse Livermore, the master speculator of the early 20th century, operated in a world of steel, railroads, and cotton. Yet his understanding of the speculative game was so fundamental that it transcends time and technology. The names of the assets have changed from US Steel to Bitcoin, from Anaconda Copper to Ethereum, but the game remains unaltered. The arena is different, a global 24/7 digital coliseum, but the combatants are driven by the same primal forces that have governed markets since their inception. Hope, fear, greed, and ignorance are the four pillars of the speculative world, as true today in the crypto era as they were a century ago. The average participant believes this time is different. They believe that blockchain technology, decentralized finance, and digital scarcity have somehow repealed the fundamental laws of human nature. This is the most expensive and consistently repeated mistake in financial history. The patterns of boom and bust, of euphoria and despair, are not a flaw in the system. They are the system itself, an endless echo of crowd psychology. Livermore's entire method was built upon this single, immutable truth. He knew that to succeed one must not predict the future but rather diagnose the present. His focus was never on what an asset should be worth, but on what the market, in its collective wisdom and madness, was actually doing. This philosophy is not just relevant to cryptocurrency. It is the essential key to surviving it. To fully grasp the depth of Livermore's methods, one must study the source. For the modern reader, there is no better guide than Max Davidson's meticulous chapter-by-chapter analysis of the timeless classic, Reminiscences of a Stock Operator. It translates the lessons of a bygone era into a clear language for today's markets. A link to this indispensable resource is provided in the description below. The cryptocurrency market, in many ways, is the ultimate manifestation of Livermore's ideal trading environment. He sought out volatility and clear, decisive trends. He thrived in markets that offered the potential for enormous, rapid price movements. The stock market of his day was a placid lake compared to the raging ocean of digital assets. Here, breakouts are not gentle upward drifts, they are explosive, vertical ascents. He taught that the big money is not made in the day-to-day wiggles, but in identifying and riding the great swings, the major trends. The crypto market is a market of great swings. It moves from profound despair and neglect to breathtaking euphoria in cycles that are compressed and accelerated. It is a market that richly rewards the patient speculator who can correctly identify the beginning of a major move and has the courage to stay with it. This is where his concept of the pivotal point becomes so incredibly powerful. A pivotal point is a moment in time when the character of a market changes, when a stock or an asset breaks out of a long period of consolidation and announces its intention to begin a major move. Think of Bitcoin spending months trading in a range below its previous all-time high. The noise within that range is meaningless. The signal, the pivotal point, is the day it breaks out above that high on a massive surge of volume. That breakout is the market's verdict. It is the declaration that the forces of demand have overwhelmed supply. For the Livermore speculator in 2025, this is not a moment for fear that the price is too high. It is the moment of confirmation, the starting gun signaling that the true move is just beginning. To buy this strength is the core of the method. But to act on that signal, you need an instrument as sharp and reliable as your analysis. Because in those critical seconds of a breakout, when volume is flooding in and price is moving vertically, the reliability of your exchange is everything. You need a platform that won't freeze, that executes your order instantly, and that doesn't erode your profit with high fees. This is precisely what Kraken Pro was built for. It's the professional-grade engine designed for speed and low-cost execution, ensuring that when the pivotal point arrives, your only focus is on the trade, not on your tools. Having an account there, funded and ready, is like having your finger on the trigger when the target appears. The link to get started is in the description. But having a professional tool is only half the battle. You must also avoid the amateur mindset. The amateur in the crypto space does the opposite. They hunt for assets that are down 95%, mistaking a catastrophic loss for a bargain. They are buying weakness and hoping for a recovery. Livermore knew this to be a fool's errand. He exclusively bought strength. The principle is simple. A rising price is a sign of health and demand. A falling price is a sign of sickness and liquidation. Your job is not to be a doctor to a sick asset. Your job is to ride the healthiest horse in the race. The crypto market makes it brutally clear which assets are healthy and which are not. The line of least resistance in crypto is a powerful and visible force. During a bull market, the path of least resistance for the market leaders is decisively upward. During a bear market, it is catastrophically downward. To fight this trend, to try and short a market leader in a bull run, or to buy a collapsing asset in a bear market, is to stand in front of a freight train. The evidence for these moves is found in price and volume. A breakout of a key resistance level in an altcoin must be accompanied by a dramatic increase in volume. This is the footprint of large capital. It shows conviction. A low-volume drift above a resistance line is a warning sign, a potential trap. The crypto charts, with their transparent on-chain volume data, provide this evidence with greater clarity than ever before. But with this immense opportunity comes an equally immense risk. The very volatility that creates fortunes can extinguish them in a matter of hours. This is why Livermore's most important principle was never about maximizing profit, but about the unwavering preservation of capital. This rule is 10 times more critical in the crypto market. In the stock market of his day, a 10% loss was a serious matter. In the crypto market of 2025, a 10% move can happen while you are getting a cup of coffee. Without an iron-clad system of risk management, a speculator in this space is guaranteed to be wiped out. It is not a question of if, but when. His cardinal rule was to cut every loss quickly. Your first loss is your best loss, he would say. The moment a trade went against him beyond his predefined point of risk, he was out. No questions, no hesitation, no hope. In crypto, this is the single most important survival skill. A small loss, if not cut, can and will turn into a 50, 60, or 90% catastrophe with terrifying speed. This leads directly to his other sacred commandment: never average down. To add more money to a losing position is the ultimate act of ego and hope destroying a trading account. If you bought a token at $10 and it drops to $7, your initial judgment was proven wrong by the market. To then buy more at $7 is to double down on your mistake, reinforcing failure. In the unforgiving world of crypto, this is financial suicide. The speculator must define their point of invalidation before ever entering a trade. If you buy the breakout of an altcoin at $5, your stop loss might be a close back below that breakout level at $4.50. If that price is hit, you do not reconsider. You do not wait. You execute. You take the small loss and you preserve your capital to fight another day. The market is telling you that you were wrong, and you must have the humility to listen. This level of discipline is not natural. It must be forged in the fires of experience and loss. For those of you navigating these treacherous markets, for those who have felt the sting of a liquidation and the panic of a collapsing position, this channel is here to serve as your anchor. Subscribe and return to these first principles. When your discipline is tested and your emotions are running high, come back here to ground yourself in the timeless logic that separates the professional from the gambler. Another of Livermore's great lessons was the importance of the trading venue itself. He began his career in the bucket shops, which were essentially gambling dens that took bets on stock prices without ever actually buying the stocks. They were notorious for cheating their customers. He learned that to succeed he needed to be in a legitimate arena, the New York Stock Exchange, where prices were real and trades were honored. The parallel to the crypto market of 2025 is stark and direct. The modern-day bucket shops are the unregulated offshore exchanges with questionable reserves, the anonymous DeFi protocols that can be rugged overnight, and the platforms that offer insane leverage to lure in the unsophisticated. They are traps designed to separate the impatient from their capital. Therefore, the choice of your trading arena is the first and most critical act of risk management. The modern equivalent of the NYSE is the established, regulated, and audited exchange. Choosing to trade on a platform like Kraken is not a minor preference. It's a foundational strategic decision. Founded back in 2011, it is one of the oldest exchanges on the planet and has built its reputation on a security-first mindset. It has famously never been hacked. In a world of uncertainty, Kraken provides stability through regular proof of reserves audits, proving your assets are backed one-to-one. Just as Livermore left the bucket shops for the NYSE, the modern speculator builds their career on a trusted foundation. Using a platform like Kraken isn't just about placing trades. It's about eliminating the one risk you should never have to take, the risk of your chosen venue. This foundational security extends to your flow of information. Livermore quickly learned to distrust tips and inside information. He knew the only reliable source of truth was the action of the market itself. The ticker tape told the whole story. The crypto world is a deafening echo chamber of tips, rumors, and paid promotion. The Livermore speculator of 2025 ignores this noise completely. They do not listen to influencers. They do not chase narratives on Twitter. They study the charts. They watch the price action. They monitor the volume. The chart of a coin contains all the information they need. The breakout from a long base on high volume is the only tip they will ever listen to. So, what does the successful crypto speculator of 2025 look like if they follow the Livermore model? They are, above all, patient. They spend most of their time in cash, observing the market, waiting for the high-probability setups to emerge. They are not afraid to do nothing. They know that cash is a safe and strategic position. They are decisive. When a true pivotal point appears, a major asset breaking a key level with massive volume, they act without hesitation. They do not nibble at the position. They establish their core line, knowing this is the moment of maximum opportunity. They are disciplined. Their stop loss is predefined and absolute. They cut their losses without emotion, viewing them as a simple business expense, the cost of probing the market for a major trend. They are not afraid to be alone in their opinions. They understand that the crowd is almost always wrong at major turning points. They trust the evidence of the tape over the consensus of the masses. They have the courage to sit tight. Once they are in a correct position that is moving in their favor, they resist the urge to snatch a small, quick profit. They know the big money is made by riding the full length of the major move. They let the trend be their friend. They focus their capital on the market leaders. In a bull market, they are concentrated in Bitcoin, Ethereum, or the one or two altcoin sectors showing the most explosive relative strength. They do not waste their money on laggards. They understand that risk management is not just a part of the game, it is the entire game. Without it, no strategy, no matter how brilliant, can succeed in the long run. The technology is new, the assets are digital, and the speed is incredible. But the underlying principles of speculation are ancient and unchanging. To master the cryptocurrency market of 2025, one does not need a new set of rules. One simply needs to apply the century-old wisdom of the man who mastered the game itself. The best roadmap to the future of this digital frontier was, and remains, written in the past.